FutureSpeak, May 9th, 2018. All right, this is an interesting day here, and we're going to look at 6 different categories of the futures markets. Look at energy, foreign exchange, the metals, the treasuries, the stock indexes, and the grains. Good action today in the stock market as it moves up through some resistance right now and actually into another resistance level. We had talked about last Friday that we thought that we'd get an early rally with the stock market moving up to on the S&P 500 2700 to 2709, and right now we are 2697, so getting up into that level, and we're going to take a look at that important level. The market being driven to the upside by energy stocks as oil surges today. Very volatile oil market we've seen the last couple days, as oil yesterday fell very sharply when there was some hint that there would be no pullout to the Iran deal, and then when that news did come out, oil recovered, but not all the way. And then today oil surged to the upside about 3%, moving to a new recovery high. So oil strong, lifting the oil stocks. Interesting other things in there that might have delayed Iran, who had threatened to retaliate against Israel, as now they're trying to digest everything that they're looking at in here. This other action that I think is significant is that the interest rates moving up over 3% again on the 10-year. That has bothered the stock market, but energy stocks helping it right now to get a lift. So some conflicting stuff going on there. Also, there are a lot of stocks that would be negatively affected by the up move in oil and by the potential for the sanctions sinking in deep into Iran, and that would be stocks like Boeing, which are up today. And Boeing also is a stock that would be negatively affected by the higher oil prices, because how it affects the airline stocks. So you can get all of this different cross currents that are going on right now. It seems to me that were oil to reverse to the downside, and it is at a point where it certainly could be. I'm going to show you that in a second. That probably would be a negative thing for the stock market, because it seems like that's what's really giving it the lift now. So we're going to see when we look at the energies that they are at important areas that are likely turning down. The last part of that is that the metal stocks are giving signs of bottoms. That would be a little bit early. Gold not as much as we're seeing it in silver and platinum, but the dollar strength, which we've had in here, is stalling a little bit, and that might be why we're getting some pop up in the metals. So amazing cross currents going on right now, and you're going to see that as we get into these charts. So we're going to start out looking at the light crude market, as we always do. I'm going to show you the basic chart setup, which is the weekly on the left and the daily on the right, and that looks really messy, doesn't it? That's the chart as they look like all the time. I'm going to move this out to 10-year weekly to get the proper alignments, and then come back in. I'm going to move this out to a 2-year weekly and then move that back in now, except that I moved too far. So let's get this right here. Okay, so now what I'm going to do is going to blow up the weekly, and there you could see, talk about blow up, this is blowing to the upside, moving through those resistances right over there of the extensions. Major 50 and the intermediate 100 was right at around 70.30. It moved up through that. We're now at 71.27. The next number to focus on is 73.23. Right there at that major 61.8% extension. I have some doubts about it being able to get up to that level. And here's the key thing that we're looking at here. We're running out of time for this correction. That's similar to what we saw here and here, right, where it only corrected about a week and a half to 2 weeks on the downside. Still, they were steep. So we're getting into that period right over here, and we expect a topping to occur. So what we want to do is look at how those dates line up, and this is the first week of June that it points to right there. For the bottom to occur. So you can see that if we're late May, early June, we have 2 or 3 weeks of potential decline right there in the light crude market. We would expect it to get down to this intermediate 23% at about 68. Now that's only $3.30 to the downside. So that's a pretty bullish occurrence, even falling to that level. And it looks like it's going to be coming pretty soon. So again, I mentioned that because I think it would negatively affect the stock market. Here's the pattern we're looking at in here in light crude. And that's set to weekly. Sorry, no wonder that looks weird. 2-year daily, bring this in right here. Okay, there you go. So there is the daily chart on light crude, and here's the way that pattern lines up. If you look at this bigger dominant cycle, that one bottoms on 6.7. If you look at this one, it bottoms on 6.7. So that's that first week of June that we were talking about on the weekly chart. You have all this synchronicity lining up. So we're getting this, you know, you can see this volatility that came in here. Also note the upward momentum. So all of that has been strong signs. There's your upward momentum signal right there. Slim ribbon widening and strong. Get support right at the right spot over here. And these buy points that came in right over here, those are buy points because the slim ribbon is positive, and that's the projection oscillator oversold and turning up. And each of those you can see were powerful right there. So right now we're getting a little bit overbought, but this upside move here has to prove that it can fail by getting some negative bars coming in there. And so far we're just getting this upward movement, you know, based on the Iran sanctions. There is plenty of oil out there, and here's the fallacy in this, and this is why I think light crude is going to roll over. Europe has not gotten on board with the sanctions. In fact, they were against it. They tried to stop President Trump from doing it, and they're going to try to hold the Iran deal together. So if that's the case, then United States is standing alone in this situation, and that is likely to mean that the oil situation is not going to get tight. Only if Iran and Israel start fighting and then the U.S. gets into it will that be a reason for oil to spike. So right now, this is really kind of a fallacy, this upside move. And you could see from the extreme low here at 67.63 to the high today at 71.36, you're getting some volatility coming in here. So the very best case on the near term I can make here is falling below the $70 number over this next week, and I think that is just too positive. I think it's going to be a little bit worse than that when we look at that. So we're looking for light crude to roll over and then start to make this top that you can see here. Oh, that's not right. I'll fix that. Right over here, that top that's forming over here, and we're looking for that to occur basically right now. When you look at the daily, we're looking for it to occur right now also, and you could see this minor cycle here, and you can see what it brought here. It brought this decline from 69.5 down to about under 67, and that's the area we're getting into right now. So I think short-term traders, again, outside of geopolitical reasons for this to explode, can look for downside to come. And some of these oil stocks are just really extreme on the upside. So that's a look at light crude. /RB is the next one. We'll just look at the side-by-side over here, and you can see that gasoline, you know, similarly, we're looking for a pullback for a couple of weeks. This one bottoms on 6.4, as you could see right there, so pretty close to what we're looking at in light crude. So we think this will fail and pull off. Now again, similarly to what we showed you in light crude, when these cycles nest, there is downward pressure here, here, and here, and look where we are here. That's creating this extreme situation right over there, and it's likely to be a rubber band that snaps to the downside in there. So we're looking for a couple of sharp weeks on the downside. Could it be that sharp? I doubt it, but you know, based on what we're looking at here, the 23.6% is at 205. It's trading at 216 now, so that would be a monstrous trade just on that quick pullback that we're expecting. You could see that on the daily chart here. Likely a big pullback. Look at all that volatility the last couple days. I think it's going to snap to the downside. /HO is next. And you can see the same thing, right? Here we are looking at the potential for a couple of week correction. That's the same thing as here, and now coming into it right here. So you could see synchronicity between all of the three energies that we just looked at. That pullback in here looks like it would get you down to about 212 in heating oil. And you look at the daily chart right over here, and you could see this rolling over. The date there is June 4th or 5th. So the same type of a pattern that we're looking at. You can also see the minor cycles in here and how they line up. So here's the big cycle. You can see that. And the big cycle, you can see that, right? Here's the minor cycles right in here. So it's essentially a half minor cycle, and then here's this one right in here, right? So it rallies, it pulls down to yesterday, and then picks up again, and then is likely to roll over and get sold off into early June. So all three of those looking pretty much the same. Natural gas, this one is very stuck. We've been, you know, showing you it's in a rising pattern, but overall very weak. I mean, this green zone is going nowhere, and it's likely to pull down. This points to the second to third week of June right there for it to pull down. We would expect this to go into a yellow zone pretty soon, falling underneath the moving averages here and going into a correction. You look at the daily chart here. I mean, it's not getting up to any resistance areas at all and just kind of stuck in there. So we would expect, again, that this pulls off. This is late May right over here. When I look at this cycle, this is actually late June. So this one looks to me like there's it's out of sync with the weekly pattern and may actually extend these out. Well, this is late June right over here. So that's not that far off. This looks like June. We'll call it June 11th to 25th. So that's second to fourth week. When I look at this one here, that's June 27th. So what that says to me is that what we're likely to do is see a pullback here, a rally here, and then another decline out into late June. And this is not a very good pattern when you look at that. So overall, when we look at the energies, you can see that we're at some extreme on this upside move with, you know, the geopolitical situation giving oil a lift, and it's certainly at a spot where it seems like any calmness in that background news at all, and oil's likely to get a pretty sharp pullback. We're going to look for 2 weeks of pretty sharp pullback coming up here. So that's a look at the energies. We're going to move into foreign exchange. Now, the dollar has been strong. It's giving a little bit of sign of weakening in here, and that is seemingly helping the metals, but it's not much of a sign yet. It's just getting up to a 78.6% and stalling by a little bit. You can see that our projection is such that we believe it's going to roll over in here and then start to correct. So we're not exactly sure if this is the week it's going to peak, or if it's a few weeks out there that it's going to peak. There's still room for some rally in here on this pattern, and then likely to pull back somewhat sharply in there. And that's where we think, we've thought all along that this June, July, August period is the period that is going to be much more favorable for the metals. And here you can see the daily chart in here, and there's your weekly resistance right there up at around 93.70. We actually smoked out this rally and said that it really looked like it was going to accelerate on the upside. We said 92.70 to 93.50. I'm sorry, 92.50 50 to 93.70, and here's that 93.70 number. Not quite there yet. And here you could see where the slim ribbon gave you that signal, and it started to expand. It's been trading way above the slim ribbon right over here. The overbought signal started to come about a week ago, and you're still been able to drift slightly to the upside in here. Hasn't done anything but maybe slow down its advance by a little bit. We made a new high in here today, so we're expecting this period in here to give us a correction, and this correction would last into about the 3rd week of May, maybe the 4th. And then the support in here comes in. First one at about 92.43, that's not very far down, and then the top of this zone around 91.83, that is much more realistic for the pullback that we're looking for in the dollar. So starting to get these signs of being overbought, and we would expect it to start pulling back in here pretty soon. /6E, the euro, is what we'll look at next, which trades inversely to the dollar. And we'll blow this up. And it's in this red zone. So this red zone goes all the way out to July, but we made a point that we thought that the dollar's peak is in sometime in early June. So this note right over here gives us a little warning that it's possible the euro could bottom earlier. We're going to look for that possibility, but right now it points to early July, this red zone here. First support, or the 78.6, comes in at around 118. It's about only 90 cents down, and then this one down over here, which is at cycle low, is about 115.80, which is pretty extreme. So, but there's certainly room for it and a lot of time. So we thought we saw this euro topping. We thought it was a great short compared to the dollar. We said that a number of times, and there it is. And that's really not changing in here. And if we get into a bouncing period, which we are getting to right now, this should actually be turning up really in the next couple of days, and that's why we think that the dollar is about to roll over for a little bit of time. We're just going to project this up, and following this dotted cycle right over there, that's a bit of a shifted cycle. It's a little bigger, and so we're looking for a bottom in here or a bounce anyway in this shorter term pattern, and that should give you some decline in the dollar, which is going to help the metals pretty significantly based on what we're seeing in here, and I'll show you that in a moment. So that's a look at the euro. Still looking bad, but for the short term, looking like it's going to bounce. The British pound, very weak, /6B. And following this pattern, as we expected, this is beginning of August to that potential low. So if you look at the minor bottom expected in here in late May, right there, so that says this declines a little bit more in here and then turns up. So that kind of follows what we're looking for in the euro, right, where we're going to get a bounce and then this roll over and head down over here again. So overall, this is a bad looking pattern. Once it broke underneath the cycle low, let me just get my proper pointer right here. Once it got underneath this level right over here, that's a cyclical breakdown, and that's where this turns red. And you can see, for those of you that are taking the cycle workshop, positive configuration, positive configuration, positive configuration. It's supposed to make a new high, and it does. Then it breaks down. So this is a negative configuration that projects out to late July or beginning of August. And that says that this big upward momentum, or the directional component to this analysis, is now rolling over, and that's going to continue to put negative pressure on the 6Bs. That means that you will continue to get failed rallies. Now, failed rallies and extended declines. And you could see that this is extending out. So we have this dotted line here which shows the shifted harmonic family, and it even got later than that, as you can see. So on 5-5 we got an extreme oversold condition right over here that's stopping the decline, but you're just not able to get much rally. Once we have our anchor point in here, we're going to put a sell zone up here and we just can't do that yet because we don't know about this bottom. So this is a really bad overall pattern. Every indication that we have is negative. You could see the Hull moving average negative momentum on the weekly. You could see the slim ribbon turns negative over here and then absolutely collapses. So momentum is such an absolute key. Now look down over here, and this is so important. You have the projection oscillator overbought, and you're under the slim ribbon here. That is sickening weakness when you look at that. Again, when you get oversold, right, as you can see right over here with positive momentum, you get rallies. So that great analytical pair is telling us that the British pound is sick, really sick when you look at that. So we're looking for a bounce, but it sure doesn't look very good. US dollar / JPY. That's the next one we're going to look at. And we expected it to rally into the sell zone on the weekly, but we cautioned that the timing wasn't right to short it yet, that we thought that the upward intermediate phase right in here was likely to take some time to roll over. So where did we get that from? We got it from the daily chart right over here, which we said was configured positively. In other words, we were getting a sign that this was bullish, that we'd get a little pullback and then it would rally again. Well, that's exactly what happened. So it's perfect. Now, when a little more time goes by right over here is when we're likely to get better short indication. In addition, you can see right over here at a price of about 108.61, that is a key level now, because if it breaks that, it gives you a negative indication. So right now we think we're in this minor rising phase that is likely to peak, and when it peaks we're going to get an area to sell it in, because all along we said we thought it would get up into this 109, high 110s area, and then that would be the place to short at 109.62 right now in the sell zone over here, but needed more time over here, and that's why we said not yet, and that was spot on. Next thing we look at in here is the Aussie AUD / US dollar, and we'll take a look here, and you can see that this is a sick looking chart. Now you can see a lot of lines in here, right? So what we saw was the potential for a shift, and you can see that right there. Now this is where the low was expected, right over here. You can see that on that dark cycle. And we were looking for a bottom to form, and we noted that actually this dotted line right over here was a very bearish scenario, and the further it got this way, the more it proved the more bearish scenario, and it is really doing that right now. The most negative scenario is proving out in here, because this bottom is the one that is acting, and this cycle pattern right in here is the one that's really working. So that this alternative right over here is actually not correct, and what is correct is this cycle right in here, and that says that, well, we've got to change this analysis in here. So what we're essentially going to do is we're going to remove these. Let me just get a little different tool in here, and you'll be able to see that when I take these out. I actually waited for this video to do this so that you can see me in this analysis, and there you can see the clarity right now as the bottom came right in here. This is a 2-week high and what's called a left-hand translation, and that essentially projects to out over here with the low coming in mid-July at that point. So that makes this, we pulled that out now because it no longer makes any sense, and what makes sense is this very negative left-hand translation that we put this note in at the end of April that we were concerned about. So that's really what we have right now, and we'll be just putting in projections to the potential bottoms. Right now this looks like down over here at that last cycle around 73 is the next spot. So this overall is just an ugly pattern. The odds are very low of it being able to put together any kind of a rally that is significant. Now, that said, look at the short-term pattern in here, and you can see the hammer bottom right there. It's about 3 days past that expected low. In addition to that, you can see it's been giving very oversold signals. It did one right over here. You got a 2-day bounce. It gave us one again today. So we think we're going to get a bounce in here into this sell zone, and that would be the shorting area. So again, because we see this negative situation here on the weekly, we look for shorting areas. We use our swing high, swing low analysis to create this sell zone for what we think is the highest probability area that we can get a short side entry. That's how we're using the multiple time frames, the multiple cycle analysis, and momentum situations. Momentum negative here on the weekly, and you could see here, well, you can't quite see it because I messed that up. So what are we on here? We're on AUD. Hey, when I do that, it doesn't let you do that. And let's go back to the negative momentum that we see right over here. So you see how the slim ribbon's coming down. It's still, by the time it gets bounced into that sell zone, this is still going to be a negative momentum. So it still shows you that it's very likely that if we get a bounce into there, that's going to be a high quality sell. Next thing we'll look at is US dollar CAD. What's interesting about this is that last week we said, as we did the analysis, that we thought that the rally that it was in, that the US dollar was in versus the Canadian, was likely to fail. And there you could see that weekly. So right now it's a gravestone doji, which would be pretty bad. And the increase in oil prices is actually pretty good for the Canadian dollar because they're a natural resource commodity-based currency. So this looks to me like the top of this intermediate rally right in here, and likely to pull down right over here as we have it projected. So I think that's a peak in the US dollar versus the Canadian. It gets up here. Note the engulfing pattern on the daily. Here's your short-term support and this shifted cycle right over there. So what we're looking for is this rally we're in to fail. We've seen it failing, pull back into the support zone. A rally right over here that then fails. You can see it's not the right time to short it really, unless you get a little pop and you want to short the daily, for day trades or scalps. This rally right over here is probably the one that's going to be the highest quality swing trade entry. So right in here, we're looking for a decline for the next week. Intraday, you could probably be shorted, right? But you don't want to be too shorted or carry short positions because of the support zone. So what you want to do then is wait for a swing trade entry, which is yet coming in the next couple of weeks. So that's a look at the currencies. Pretty involved look right there. And overall, the dollar not quite giving up the strength, but indications, and probably the right time for that to start happening. But the euro and the British pound are looking really sick, so you're not going to probably get any real big declines here in the dollar while you have that situation. So we're going to look at gold, silver, platinum, and copper. We're in a situation right now where we think that, at least for the near term, the dollar's advance is going to stall and get a little bit of a corrective period. Now, it looks to me that the buyers in the metals are starting to get ahead of that. And the timing is right for that to happen. After all, I mean, if there's any validity to these oil prices, then there's an inflationary scenario built in there, right? We had talked about the gold market having another couple, 3 weeks of likely correction in here, and that it was likely to give us a drop to 1302 to 1288. So it traded 1302 last week. It didn't quite get that low this week. And we think it's in the terminal stages of this correction right over here. So that red zone you're looking at right there, that's in the intermediate. This is the major cycle that you can see coming down right over here and then coming up right over here. So we're right now in the terminal stages of this one. Terminal stages give you velocity, and velocity in this case should be to the downside. We don't know if that period is over yet. When I look at silver and platinum, it's giving me warnings that there's not much more time in here, and that it's likely to be bottoming pretty soon. You could see these 1302 low, 1305 low, so it's getting down to that 50% and getting some support. I certainly wouldn't want to be short looking at just that little bit of time. Now we're just going to look at these last two cycles right in here, and you can see the beautiful harmonics in there, and what we're looking at here is the final stages, which goes only the next week or 10 days. In week to 10 days, that's 5 to 10 trading sessions or less, actually. And note this morning star bottom right over here, and then the little hammers that are forming in here. It's having a really hard time going down, and this would normally be considered a bear flag or a bear low and tight rectangle right in here that would resolve itself on the downside. We're going to be looking for whether or not it's going to resolve itself on the downside or not. Over 1320 would probably be an indication that the decline is over, so it's pretty tight. You can see that. Under this level here of 1302, and you probably have a capitulation on the downside. Again, 1288 is our number that we're looking at right over here at that 61.8% on the weekly. So 1288, 1302, I don't think it's going to do worse than that, honestly. And then we're going to get into this period right over here, this rising period there on this daily chart. And if you look at the rising periods, I'm going to look at just these two right over here. This was a low, we're just going to estimate it about 1225. This was a peak up over here at of about 1378. That was $150 on the upside. This low over here, approximately 1338. This peak over here, approximately 1370, right? So that's $132 on the upside. So we're getting into this period over here where this bottom comes, and if 1302 is the low, well, it's calling for 1450 really on the upside. When you look at that, and that was near where our weekly projections were a long time ago. So here's this fib extension way up over here at 1395. That was my upside projection before. I don't have any other ones in there right now, but very minimum would be that area up near 1400, which would be about a 100-point advance in this period right over here. So that's what it looks like on the weekly. Here's the bottoming here on the daily. So you would say, okay, well, that's going to take a weaker dollar for that to occur, and we just said, well, the dollar has a little bit more time, but not all that much time. And any time period, like we are right now, where we could get a bounce in the euro or the British pound together, those are windows of opportunity for the metals to do well. The key is, do they do well? And when I look at silver, it's indicating to me that it wants to bottom, that buyers are coming in here. So here's the silver pattern in here, and we expected it to have another couple of weeks moving here on the downside and then turn upward. You can see that. Now, this cycle's a little bit off here. It's a little wide over here. So you can see there's a principle of variation coming in here, and this is really the one that's lining up a little better right now, which says, well, that low really came on it right there. So I'm wondering whether this projection isn't too long. When I look at the daily chart, look at this. I mean, it's turning up right over here. it made its bottom a little bit early and then couldn't get down to that level again, and now is starting to turn up already. So this is some indication to me in here that it's trying to bottom already in the silver market. So when I look at this cycle right over here, that ends on July 5th. So there's no way that July 5th makes any sense to me when I look at the weekly chart. That indicates to me that it's trying to bottom right now, that we're likely to get some upside moves here, and this could be the beginning of the bottoming and the a big upside surge that I saw coming starting in the summertime. And I think it's starting to give us indications that it's starting to line up right now. I don't think you could, if you think there's a little more dip in here, I would not trade it on the short side. Here's the platinum pattern right in here, and we were looking for a low to come right in here, and that is mid-June. But again, this kind of has the sense that it's not going to get much worse than this 893 level. And when I look here at the daily chart, well, it's trying to bottom already. So here's that silver pattern, which had a little more time. The platinum pattern actually has this morning star right there after it got extreme oversold a week ago. And that really looks like it's turning up already. That's this projection in here. So we're getting a pretty good sign that this is starting to turn up. Now, I want you to note that we're going to learn right now the condition, because the slim ribbon is clearly negative. I mean, you've got all this negative momentum. Now, you got overbought right over here, and it should have turned down, but it didn't. It's overbought again, and it should turn down, and we're going to see what kind of a dip we get in here. If we don't get a significant dip, then this upturn we're looking at is correct. And it's telling us that we're likely to have seen the bottom already, and there's some signs in here that there is buying coming in, and the bottom is starting to form. And really watch the relationship between the dollar, the euro, and how the metals move. On days when the dollar is weaker, how much does that affect the metals, and do the metals then start to pop? And that'll give you some indication of relative strength. Here you could see copper on the weekly. You see that potential head and shoulders forming in there. We have believed that it was negative. There's still plenty of time to rally in here. You could rally for a month, get back into these resistance areas, and then roll over and complete the pattern. So we don't necessarily say that copper is a short yet. All we're doing is indicating the possibilities. Now, as a matter of fact, when you see this pattern right in here, and I'm going to make this a solid because it'll be a little easier to see, and that's more likely what's really going on. You could see those patterns. Here's the old pattern right in here that doesn't align at all anymore, and the new pattern aligns very closely. So it's trying to bottom in here also in this support zone. We'll have to see how much of a rally you can get in here. We're expecting that we're going to get a rally back up here to around the 89-day moving average, which is at around maybe 1315, and that would be some more formation of that shoulder. So you can see we're looking for a next week and a half or 2 weeks to potentially tick up. That's an alignment with the rest of these metals. And I'm telling you, I won't be surprised if we start to see some big days, especially the silver market. That one had a lot of pop in it in the last few weeks on up days, and so we're going to look for that potential for silver to kind of lead the way on the upside in here. That's the metals, and I'm really getting a sense that there's a period coming right here where they're going to move up pretty sharply. The window is there. And it might be a week away or 2 weeks away, but I think it's really close. So that is a look at the metals. The treasury market, this is still in decline. The move that we're seeing today is more weakness as the 10-year pops back over the 3% level. The indication is in the 10-year that we're projecting to lows coming in the next, well, it would be several weeks out there, where we're looking for maybe the first or second week of June for those lows in the ZNs and ZBs. This is where that low projects right over here. You can just follow the perfect cyclic action in here, where it fails, and here it breaks that low. It can't even rally. It sharply falls. It has a minor rally and falls again, and there's that low due in June. So that's where it lines up. We think that it's going to continue to track its way to the downside. Here's the short-term patterns in here. It touches that declining resistance zone right there in the first of the three minor cycles. So that's what we'd expect, coming down for a few more days, an attempted rally, and then coming down again. So that's a bad pattern when you look at that, and we're going to expect it to continue to move to the downside in the bond market, and for yields to continue to move up. I've made a point that I really think that the Fed has to do something to get these long-term rates higher so that they can raise short-term rates, and you can see it happening now, and I wouldn't be surprised if they did something aggressively to get the long rates moving up. Here is the ZB, same thing, late May, early June for that projected low there, and the same thing for the weekly, where we look at this projection right over here as June 21st, which is kind of a long way out there, so that could extend it even further when you look at that. Again, first of the three minor cycles right here, a few more days to the downside, and then a likely attempted rally. That sell zone, perfect. You can see that as every time it tried to pick its head up in there, it just moved down, and anybody trading off of that on a daily basis has done really well. That's a look at a very weak bond market. I want to show you something really quickly. This is our new service, the Stock Index Report. This is a report we put out once a week, plus we update it as necessary. So it comes out on Thursday mornings. If you're a stock index trader or even an investor, we show you all of our analysis. That's all of our cycle analysis, all of our momentum analysis. So many things that will just make so much sense to you, all in this one report. And you're going to find it amazingly comprehensive. I'm going to take you quickly to our website so that you can see what this looks like. So here's the Stock Index Momentum Report. And when you open this up, you're going to see, well, there's a lot in here to look at. And over here are all pull-down menus right in here. So what I want to do is I want to scroll down and show you really quickly what's in here. Stock Index Cycle Momentum Report Overview right there. And what we do is we open that up, and you're going to get all the information about how to use this. And then when we scroll down here, you're going to see the stock index summary. This is our update that we did just a couple of days ago. And I open that up, and what you're going to see is our momentum indicators right there. So that will give you a good sense for the summary on the conditions in the monthly, weekly, daily, and our projections for the stock indexes. I'm going to close that right now. This is our momentum indication tracker, and you're going to see, well, look at that. Look what happened to the stock market in here as all of the monthly, weekly, and daily charts and intraday charts turn to positive momentum. Boy, is that ever a picture. And then when I come down and show you these charts, you're going to see there's a peek at the 2-month daily charts comparing the S&P 500, the NASDAQ, and the Russell. You can see they're all green if you look on the right side of them, so positive momentum there. And if you're even a short-term trader, there is the 2-hour chart showing you the strength in each of those three indexes. Plus on the bottom is our MCI, market condition indicator, all of that turning positive just in the last couple of days. So that gives you a good picture for the momentum. And then if I scroll down a little bit further, you're going to see there what we give you are the overviews. And this is just a picture of the S&P 500. Take a look at that. So what we show you is our weekly chart right there, and all of our cycle trend indications on that. and then we'll show you our daily chart right there, which is our shorter term, and then a 6-month picture of momentum, which has turned positive now in the S&P 500. We're going to also give you our overview in there with our long-term outlook, our weekly outlook, which is intermediate, and our daily outlook that you can see right there. Just lots of great stuff there. Support, resistance, alert zones, all of those really important to you. And we do the same thing for the NASDAQ and for the Russell also. So just unbelievable, huge amount of information in there. We wanted to bring it to you. We wanted to make it so affordable, and even more affordable right now, because what we're going to do is we're going to let you get grandfathered in for this unbelievable low price. You know, some places would charge, I don't know, $100 a month, $50 a month, but here's what we're going to do, because we want to get a lot of people in for this pre-launch period. Send me an email to slim@askSlim.com. and I'm going to send you a link that's going to hold your place, and you'll have this price forever. $15 a month. We want to just load it up with a lot of people. So you're only going to have 5 days to do this. So send me a email, slim@askSlim.com. I'm going to send you back a link, and we're going to hold your spot. You're going to get all this for just $15 a month, and we're going to lock it in before these prices go up. So make sure that you write me right now, because I don't want you to miss that. That is the stock index report. So the stock market is surging and continuing to do that throughout the time I was recording this show. I started, the S&Ps were up around 22, now they're up around 28, and have gotten through a fairly significant area on the very minor patterns, and now have moved up into a resistance area that I'm going to show you on the daily chart. So we're going to start out first by looking at the 2-year chart of the weekly, and this triangle is really coming into play right now as it narrows and narrows. The very lowest odds situation would be that it breaks out on the upside in here, and we've already seen a low. That would be extraordinarily low probability. But we're getting up now. You can see we got down to that green, to that red VTL right there, and now this narrowing focal point is getting closer, right? So it's really in play. Important lows are around the end of May and third week of May, third week of June, which is where this period right over here comes in. So that's why our downside projection remains. What's really significant is that all of these rallies that we keep getting, well, we're only at the 50% right over here. It's not like we've made any monstrous move. So even if we break through this VTL and we move up all the way up here to 2741, that would not be a bullish occurrence. It simply would be an extension out here and might even push the low out further. We're hardly anywhere on the upside in here on recovery, and been trading in this range now for about 7 weeks, and I don't know that it's likely to really significantly come out of the range at the moment. And this rally we're in, which is very led by oil, is likely to pull back if oil pulls back, which we just talked about is a likelihood. Here's your daily chart. Now there's some important information in here. You can see this gray cycle right over there. That was the cycle that we shifted out of, and now it actually has regained dominance. And that's why we leave it in there, because we want to really do our best to understand the energetic forces in the market. So we put this note in here that moving above this level would confirm that this had come back into dominance, because this high right over here then doesn't make any sense at all. So what it says to us is that we are in, I'm going to draw this pattern out for you so that you can see. We are following this gray pattern right over here. and we believe that it will roll over and then take over again on the downside. But right now, because we broke out above this key level right there at 2683, you're getting buying coming in. So we said 2700 to around 2709. This the 89-day moving average is at around 2709 right now, so that area a little bit higher. This high right over here is 2716. So from where we are now up to 2716 is some pretty thick resistance. So we think that it's going to stall in there and then roll over. We will rework this to show you the dominant patterns and the minor patterns now that we have that happening today. And like I said, I still believe that if you follow this gray pattern right over here, that's likely what we're going to get right there. So we have a little bit more information as it breaks out here, and it then helps us project. If you look at this pattern right over here, that low is at around June 10th. So we would expect that the period of risk that we were looking at, and you can see the gray period of high risk, takes you out to June 10th, and that's where we think the downward acceleration will come down to and likely finish this correction. So we think this is going to fail sometime between here and 2716, and then move back to the downside. So we'll be fixing that up for you to see. NASDAQ actually moved through its VTL some days ago, and you can see in here that it's moved up now through the 61.8, much stronger based on the Apple lift that it's getting in there. And again, you can see that there's a triangular shape going on in here, and that it's, you know, likely that before this corrective period is over with, that it's going to threaten the bottom side of it. So we're looking for this projection in here to take it back to the downside. And we've had a lot of these periods where we've got these upside spikes that have just failed. Now here you can see it moves up through this level, and it gives you the important message right there. And here's your rising VTL over here, and this is where it broke out right over here at 66.94. That's 200 points ago where you got that VTL message on the upside. So when I look at this pattern in here, it's suggestive of the fact that this is going to roll over at some point. Here you get one more rally, and then you get that big correction out into June over there. So again, this is a better pattern, but it's not as if it's saying, okay, new bull market. It just says short-term wise, we have a better situation, and we have momentum having turned up and through important resistances, so it brings in buying as people get to be believing that everything is good. Now, I highlighted these areas right in here for you to see. As you could see, where you get these nested areas. So the last 5 days or so of this cycle right over here brought you a very sharp decline. It rolled over a little bit, and this whole thing took about maybe 8 to 10 days. The same thing happened right in here, and these last 5 days were very sharp on the downside. That's where we're coming into right now. So this area back over here around 66 is really about the target that I see in here, and why I think that we're going to roll over pretty soon and begin to get back into these corrective markets. Maybe it's some geopolitical thing that's going to change it. I don't know how you justify oil coming up to this level because of geopolitical problems, and the stock market not being negatively affected by it at some point. So this is entering into that period of high risk that we were talking about, and we could just be a rubber band ready to snap back on the downside. So that analysis always could be wrong, and we'll let it prove to us whether it is or not, but we just look at the highest probabilities, and the highest probabilities that I see in here is that this corrective period is still yet to come, and now we're getting into this period of risk, like these two yellow zones over there. So that's why I don't trust this rally that we're getting right now on the upside. The Russell has been the strongest of all the indexes. This one moving up, you know, amazingly close to the high. So I'm not surprised by the fact that you're getting all of this upside strength coming in, and that it's, you know, following this much more steeper upside triangle that you see right over here, and you can see the key area that it's coming up to right now. So all along I've made the point that the Russell is telling us that we're not entering a bear market, that this has all just been a correction. And then when we get into the next rising phase, which is summertime over here, is the time when I think that the best upside potential for the market will come. Daily pattern in here, it crosses the VTL 3 days ago and accelerating on the upside. Next key level up here is at 1608. Excuse me, not that far away. And again, we're looking for this to roll over and begin to correct into this zone right over here. So that is a look at the Russell, and we will take a look at one more thing in here, because I want you to see the Dow Jones Industrials on the daily chart. This, of course, is your market, the highest cap stocks that are in the Dow Jones Industrial Average. Let's take a drink. Look at this. While we have the Russell up threatening the highs, way up over here, right? And the S&P 500 threatening the 50%. Look at the major high cap stocks, the most widely held stocks. They are incredibly sick. And what this shows you is that the move that we're getting now on the upside is very narrow. In other words, the stuff that's being bought is kind of more of the marginal, or, you know, not that widely held, and the stuff that, you know, are the major companies other than Apple. Imagine what the Dow would be looking like without Apple. This is sick, and this is part of the reason why I believe that once the short-term upside move is over with, that this is going to move sharply to the downside again, and the likelihood of the Dow taking out that low, which everybody looks at, 23,360-ish, is very high. So, you know, with the Russell threatening to make new highs, that the second and third tier being the leadership, and the Dow looking like it'll easily make a new low, well, that just shows you a situation of disparity, and you don't get major resumption upside moves when you have market disparity. Until we get this stuff in sync in one direction or the other, all the moves are probably going to be fake. And right now we're in a move that's to the upside, and the highest probability is that it's fake. So we'll take the last three charts that we're looking at. Actually, we'll make it four. We'll look at a substitute for coffee because we have so many people that have been asking me about it, and I would say that let me just fix this right in here. That I can say with some confidence that we'll be bringing back the ICE futures coming in the next week or so, and you will then be able to see some of the other things that we haven't been able to show you before. Here is the corn market. So this accelerated to the upside, got through the 78.6%, a lot of volatility around that threat of the Chinese tariffs right there, and then had the acceleration to the upside. This looks like it's at a point where it should be rolling over. Now, when I look here at the daily chart, you can see that downside gap, and as it got into this fib target zone right there, and then started to roll over. And also, when you look at the nested cycles, you can see that you got your correction right in here, you got your correction right in here, and that's where we're coming to right in here. So corn to me looks like it's starting to roll over, and we'll be looking for that corrective pullback that you can see there on the weekly to begin. Here's the wheat market right over here, and you could see, well, pretty similar, right? You can see it's rolled over, hit that resistance right over there, and now the target is for it to get down to about 490. That's in about 6 weeks. That's a long time, right? So maybe even lower than that. Here's your short-term pattern right in here, which calls for it to get down to close to about $5, and then have a bounce, and then roll over again. So, but you could see the engulfing pattern right over here, and note that that came just as on 5-2, where our option bias indicator gave us the extreme overbought condition, and then it immediately reversed. So, fantastic indicator that is. And that's a look at wheat, which, like corn, looks like it's rolling over. When you look at soybeans, this was the worst of them, and you can see that it really is bad. It has a breakdown in here. Here's your, we're just going to keep the side-by-side up so you can see what we're looking at right there. Here is where it rolled over. So the patterns that you're looking at, that's an engulfing pattern right over here. This is a dark cloud cover. You could see the wicks right up over here, and that gives you the warnings that you're at a point where it's rolling over. Now, when you look at the short-term pattern, you see it hit that buy zone right over there and exploded. So that was 1030 up to about 1070. And then it rolled over and took out that low. So you have a cycle support breakdown here, a violation, which gives us a warning that overall what's going on here is that the topping is confirmed. So what would we expect? We would expect it would have another few days on the downside and then rally again, and that is a high quality short sale right over there. So that would be on the weekly right over here, a couple more days down right here, a potential bounce in the yellow zone, and then moving down again, maybe to the 78.6%. So if we can get a short off here around 1035, 1040 in about a week and a half or 2 weeks, then the odds are pretty good it's going to get back down here close to $10. That's how we're going to use the multiple time frames and the information that's coming off of it. Soybeans looking the worst of all of the grains. And the last one is one that I've never showed you on here before. JJ OFF. This is coffee, and I'm only going to show you this probably this week because we should be back to the coffee features next week. Here you could see the cycles coming down. It's pretty reflective of what we see in the other coffee and cycle patterns. It looks like a bottom occurred, and we're testing it as it's pulling back here this week. When I look at the daily pattern, look at that, a potential base forming. Now note this VTL, that green line, and how that was perfect, and then it got you an explosion on the upside in coffee. Now it's coming down. As long as it holds above that low at 1365 on JJOFF, then the base will form. We're kind of coming down and testing that downward VTL right over there, and that's kind of a target right there. And then we would expect it to turn up. We're going to look for 2 to 4 more days of some pullback in here and then turning up. If it follows that pattern, the odds are high that it's going to get above that level there, which on this is 1516, which is a long way up. So that would be a good bullish trade right there. We think it's starting to form the bottom when we look at that, and we'll get a better picture of it when we get to look at the futures contract in coffee. Not that far off. We hope to have it all in the next week. That is a look at everything. We looked at so many things, and hopefully there was a lot of trade setups that we talked about coming. The one that I'm really the most focused on right now is, does the dollar flatten out, and do we get a bounce in the euro and the British pound? Those are bad-looking currencies that are in bouncing areas, and if that happens, how do the metals act? And if the metals act as I suspect, that they start to pop pretty strongly on the upside, you're going to have a good sense for what might be a pretty good bullish period coming for gold, silver, and platinum. That, I think, is maybe the feature for the day. That's it for FutureSpeak, and I'll see you in the next video.
I'm going to sit and I'm going to do a stage show.